there everyone, good afternoon and welcome to this edition of Closing Trades. I'm Avan Dabash and with me is Ajay Sharma. And Ajay, we're bleeding blue today. I don't know how many people are even watching the screen right now because we have a screen on there with the cricket match.
This is the low volume edition of the market. This is the low TRP edition of anything beyond cricket on television. So yeah, you're right about it, but we got to do what we got to do because the market is on people's phones, so they can still be watching TV and still tracking markets. And look at the way almost at 19,700. So almost a 900 point rally from that Thursday of 18,800 lows. Market is rebound. And interestingly, not just the large caps, the bank Nifty has come back. There is small cap, mid cap already leading from the front, and there is a complete change in narrative, in the global narrative in the last 48 hours. Now we have the chances of any rate hike in December have collapsed. In fact, chances of about 275 basis point rate cut in the US have come on the table by UBS note and some others as well. And that has led to a sharp rally. Globally, India is participating as well. There are other factors as well. The numbers are good. India's own CPI has fallen along with no big. In fact, Avan, are you aware? Just half an hour back, there's a third international brokerage has come out. Nomura is now saying India is looking good. Yesterday, Morgan Stanley and Goldman both. So people are kind of positioning into this pre-election rally which is happening, and we are looking good. But the big story is not markets today. It may be the second headline, but the big story has to be cricket, isn't it?
Absolutely. It's the first semi-final of the ICC World Cup. It's underway. The josh is absolutely high. Remember, we won the toss. India won the toss. We've chosen to bat. So let's find out. Let's get a little bit of a mood check. My colleagues Karishma, Shweta, Arunil from the Times Network, they're with the fans. They're getting in a bit of a mood check. Maybe we'll try and spot Anisha over there as well. Take it away, guys.
People are obviously very, very excited about it. They are hoping and praying for an Indian win. We are going to be talking to some fans as well. Sham sir, I'm going to call you a fan today and ask you what are you expecting from the match?
Look, whatever I'm director or whatever it is, but my fan inside me is always there. It's always alive. And this is a tough match, very tough match. If we are going to win today, it's going to be tough, but we are going to win today.
Well, absolutely, we are going to win today. I'm going to try and speak to more people as well and ask them what they think about the match today. Do you think it's going to be an easy win for India? It's going to be tough.
It's a tough game, but I think India will sail through, given the form.
India will see through.
I think this is going to be a very difficult match for India, but I'm 100% sure India is going to come out victorious and we're going to go to finals.
Well, absolutely, and we can see the excitement here, wherein people are dancing, there are dhols over here. So this is the mood right now as far as the Indian team is concerned, and the excitement for the big semi-final is concerned. Everyone is hoping and praying that India wins against New Zealand.
There's love, light and lot of cheer for Team India. You can hear from them. And these people have been cheering Bharat, India, and they are looking forward for the match. And here, I'll come to you first. You're here with your entire team. First, let me ask you, how far do you believe that, while we speak, New Zealand is a tough competitor for us because 2019 is still haunting us somewhere?
Perfectly true, but India definitely 100% gonna win. Go India, go! All the best to Indian team. All the best to Virat Kohli. Looking forward for his 50th century. Go Kohli man, go India!
My only fear is that the law of average shouldn't catch up with India.
Right.
My only fear is that.
Strategy is on point. What do you say about the batting order? Even we have the magic of, you talk about Siraj, you talk about Sami, you talk about Jasprit Bumrah. In fact, Ravindra Jadeja as well being the spinner.
I think it's really good. As long as we restrict them to less than 300, if they bat first, we're going to win it. Yeah. And if we bat first, if we score 330, 340, we're obviously going to win it. That's it. Because we have a really good bowling attack.
So that's the cricket fever for you, but because Wankhede is very close to Bombay Stock Exchange, some of the market guys are also coming down, and that guy in the center who said law of averages will play out, I think has to be a stock market guy.
Your twin.
Oh, well. Let's move forward and take the discussion on markets, where a very interesting inning of bull and bear is also panning out over there. Shibani Sarkar is also joining in along with Nuresh. Shibani, Nuresh, Kunal. Let's take the discussion forward. Shibani, is a bottom in place now? Has the narrative structurally changed as far as rates are concerned, and now the street will start moving into that first rate cut, which is likely to happen in the next 6 months or so? Is it very material development which we can't, just not an ordinary global cue, which we cannot just take in the stride?
Yeah, hi, good afternoon. And obviously, all our eyes are on the cricket match, and difficult to concentrate on markets in such an environment. But as you rightly pointed out, one of the key drivers for markets, both globally and in India, will be the trajectory of rates and what the Fed does. Our belief is that inflation in the US has been coming off, but clearly what the Fed is now signaling is that rate hikes may be off the table, but the timing of the rate cut cycle is still fairly uncertain. So we will have to wait and watch from that perspective. For India, however, I think what's clearly playing out is more a structural growth story where, on a relative basis, India's macro growth is standing out. And the fact is that even in the current earnings season, corporate earnings has been holding up fairly well. And in fact, this earnings season has been widespread in terms of earnings delivery across sectors. Now, in this sort of an environment, the only factor that we really need to keep an eye on for India, in my opinion, is valuation. From a large cap perspective, valuations seem to be at reasonable levels in line with long term averages. Mid cap valuations are slightly above long term averages, but small cap valuations continue to be significantly above long term averages. In this sort of an environment, some degree of volatility cannot be ruled out, even though structurally we believe that the all the ingredients are in place for Indian equities. So our overall view has been that slightly we overweight on large caps where the margin of safety is in your favor, and slightly underweight on small caps in the near term, especially given the kind of volatility that we are seeing. But also from a sectoral perspective, our belief is that domestic facing sectors continue to be far more resilient and growth opportunities remain intact.
All right, domestic linked sectors, that is what Shibani is looking at. But I wanted to also get in a take from you as to what the sense is when it comes to the entire frontline banking space. Is it that you're expecting some of the stocks that have been lagging off late now to play catch up, the frontliners?
Yeah, so that's been a one space where, if you look at what's been happening for the last maybe 12 to 18-month period, the space has been significantly lagging. But however, now when you look at the key parameters of the sector, loan growth has been panning out much better than expected. Loan growth remains fairly robust and widespread. In terms of the liability profile, a lot of the banks are now seeing improvement in terms of deposit growth, especially so some of the large private banks where deposit growth has now been ahead of the industry. And therefore, that market share shift that you're seeing on the balance sheet side continues. Asset quality trends, while there have been debates on unsecured loans, has been holding up, in my opinion, fairly well. And valuations are clearly in your favor. At this point in time, for some of the frontline large cap banks, apart from the issue on the ownership side, if you look at fundamentals as well as valuations, we believe that these banks are fairly attractively placed.
It's very important to mark a big NBFC right now. In such a market, it is collapsing in trade, and that is Bajaj Finance. Look at Bajaj Finance from the high of almost 74.66 today. The stock has fallen. It's trying to recover, but it has taken a knock. And certain sections of the market are, there's a chatter on the street. Shibani, when such large sized NBFCs, do they become very, does their size also starts posing an issue, or the regulatory environment is so strong and, the management quality, everything, checks and balances are already in place, the size doesn't really matter?
So I'm of the camp that, size doesn't matter simply because the opportunity for credit in India is huge. While we keep saying that India is underpenetrated, it is a fact when you look at numbers that the growth runway for credit in India across segments remains very large. And therefore, while we keep having this debate about size and balance sheet and therefore the inability to grow, I think the growth runway remains. So if you look at NBFCs overall from a sector perspective, NBFCs growth has been actually ahead of the banking sector. In particular segments, NBFCs continue to deliver on growth. The issue for them over the last year has been margins, and with interest rate cycle trending up and wholesale rates moving up, NBFCs have seen pressure on margins. As we were discussing earlier, it is possible that the rate hike cycle is now coming to an end. And from that perspective, NBFCs should benefit given that they are wholesale borrowers. And on the lending side, many of the NBFCs which are fixed rate lenders will possibly start seeing some sort of margin bottoming out, and then over a period of time, margins should start to inch up. Within the NBFC space, the best way to look at stocks would be three key factors. One, of course, as we were saying, the growth runway. Second is in terms of their presence in a segment where there is lesser competition or there is a niche that the NBFC enjoys. And the third would be parentage, which gives them access to capital. So from this perspective, if you look at NBFCs, overall valuations do seem attractive.
Taking a look at some of the interesting movers over the last month or so, and names like BSC have risen about 55%. Suzlon, of course, has been a buzz. Today is no exception in the kind of rally that we've witnessed of late. 50% is what you've seen on that stock. Angel One is another stock that has gained traction, 42% in the last 1 month or so. Kunal, let's get in a take. I don't know if you track any of these, but what are the charts indicating?
Yeah, so the last two ones, Angel One as well as Suzlon, I think both of them are attractive. Angel One, I think, in fact, many of the broking firms, the stocks, Motilal, yes, even that stock has moved up higher. MK, I think, is up some 9% or 10% today at 109, 110, the last I had seen, for the stock. So I think many of these stocks are doing exceptionally well. So it doesn't come as a surprise that, Angel One is also looking very attractive on the chart. So I would probably be of the belief that the stock looks attractive and the sector itself looks to be on a very strong uptrending mode. Suzlon has been one of the showstoppers so far from the mid cap, small cap spaces. The stock has done exceptionally well so far. Even at 39, 40 plus levels where it's trading right now, it doesn't look like the momentum is abating for the stock price. So I think that also looks as an attractive bet.
All right, tell you what, we'll take a very short break right here on the show. Come right back, lots more market talk.
Okay, so India has lost its first wicket. Rohit Sharma at 47. 70 is close to what the run rate is going on right now. Let's see. But as Kunal, who's also lives very nearby to Wankhede, is telling that Wankhede is actually a bowler's pitch, right?
Yeah.
It's a small ground and it's the bowlers who actually do the magic. So just tracking the, how many runs are we making actually may not be the right point.
Yeah, it may not be the right point. But I think, batting first always has an advantage because the pitch, I'm not a cricket expert as such, but I think that the pitch plays dual. So in the first half, I think the pitch is a bit, the ball comes to the wicket. In the second half, I think it gets a bit slow.
Okay, let's, it's where the action is not getting slow is the market. And one capital goods stock which is gaining smartly in trade is Siemens. Shivani, have you tracked this is not a chat about the stock, but the company. There have been some corporate announcement around it. The business cycle has favored them. There's no question about it. We can always talk about, questionable valuation, but the business cycle has been very well. There were some recent announcements which certain sections of the market did not like, some transaction, but now a detailed commentary coming in about a corporate restructuring which may be underway at the parent level, but may impact Indian business. Have you looked at it?
Compliance prevents me from talking about a specific stock per se. But, we've been vocal about one key theme that we have been playing across our portfolios, which has been the entire manufacturing and industrial space. What we believe is that what started out as growth, largely driven by public capex, is now showing signs of spreading out into private sector capex as picking up. We've also started seeing utilization levels pick up at a headline basis as per the data that RBI puts out on a quarterly basis. And therefore, our belief is that the entire capex cycle still has a fairly long headroom for growth. The second factor is if you look at the quarterly earnings season, most of the companies that have reported numbers have shown that order inflows continue to be very robust. And therefore, the momentum in terms of ordering, especially for the engineering capital goods infra space, is something that will possibly also drive growth. And again, incrementally, we are also seeing new areas and tailwinds for the entire growth story to play out. While again, the debate has been going on in terms of where valuations are, we believe that in pockets, the opportunity set still remains fairly intact. One has to be, of course, mindful of valuations, especially if valuations look extremely rich. But the infra manufacturing capital goods the overall opportunity set remains large, and we continue to be fairly positive. And this is a theme that we believe will play out from a structural perspective over the medium term.
That's the view coming in just from a long-term perspective on the fundamentals. But let's discuss the charts then. And Kunal, take us through how Siemens has been trending and what are the charts indicating by way of target price?
Siemens, I think specifically has been a stock which had done exceptionally well. I think in the end of 2022, start of 2023, the stock I think at one point was almost at 4,000 rupees. Then I remember, I think there was a point when there was some news flow which had impacted the stock price. There was a sharp fall, one single day for the stock when it fell some 200 odd points from those 4,000 odd levels. And then from there on, it's just gone through a drag. So I think from the August highs of 4,000, the stock had corrected towards 3,200, which is a good 20% correction for Siemens. Now, at current prices, the stock is trying to make a comeback above the 200-day moving average, so which means it's trying to end its corrective wave of 20%. But I believe that eventually these stocks, they take a lot of time to try and make a comeback for themselves. So my sense is that 3,200 could actually be a better price or a better entry point for Siemens. I think buying the stock at those levels would probably attract more attractive as well as better risk reward.
Sure. Let's analyze that particular announcement which has come today, which excited the stock momentarily. We got a sector call from Shibani. We got a chart call. Now let's understand the announcements. And Lisa is here. Lisa, tell us what does it really mean?
Right. So it's actually a revision in price what was mentioned. So Siemens India will be acquiring 18% stake in Siemens India Limited for a purchase price of around 2.1 billion euros. And Siemens as well as Siemens Energy both will jointly propose to the board of Siemens India Limited to separate the energy business by way of the demerger. Now it all began when Siemens Gamesa, who is a subsidiary, which is a subsidiary of Siemens Energy, they identified quality issues way back in 2023. Way back in June in their offshore turbine business, and so most of the issues that revolved around the quality problems at Siemens Gamesa. So Siemens Energy said that there is a separate set of challenges in the offshore turbine part of Siemens Gamesa business, and the resultant impact is that the company disclosed a 15 billion euros financial shortfall that, if unresolved, that could lead to the collapse of the project pipeline. So Siemens Energy AG has acquired a 15 billion euro deal with the German government, and its biggest shareholder, that is Siemens AG, as well as consortium of the banks as the troubled manufacturers, weather massive losses at its wind turbine. So what is the analyst saying, especially Phillip Capital? They said that there are two scenarios to this. One is the first scenario, where a potential demerger of Siemens Energy that would eliminate the anticipated cyclical upcycle play in transmission as well as the distribution segment, and the second scenario where the demerger won't happen, and Siemens AG will plan to acquire an 18% stake in Siemens India from Siemens Energy for 2.1 billion euros. That comes to around 19,000 crore rupees in INR terms. So yes, considering the current market capitalization, 18% stake, that would result in 22,400 crore rupees. So right now they have a neutral rating on Siemens India Limited at a target price of 3,400. So that's the word coming in from Phillip Capital.
That was the detail about the transaction which has happened. But Nuresh, I wanted to scratch that point which Shibani was making, that rate cut cycle, if it starts by mid next year, actually it's the NBFCs as a lender which will actually benefit, because they are the wholesale borrowers. Growth was never an issue for them. It was the cost of capital. If it comes down, it will be added, Philip. I want to analyze with you the entire range of mid to small NBFCs, Indiable Housing Finance, LIC Housing, PNB, UGRO. If you can tell us which are the charts, some of the charts which are looking good to you for this trade, for the mid-cap, small-cap NBFC trade.
Yeah, so in the sector, the first thing which looks very promising has been LIC Housing Finance, because it's been a sideways stock. The stock is still available at the prices where it was pre-COVID. So the stock used to be 450, 500 pre-COVID. It had gone to 450, 500, 500 odd levels in start of 2021. And since then, the stock is available at the same prices. After making a breakout move, it is still around that 450 to 460 area. So this could be a stock which could go, which could break out going forward, go towards 550, 600 levels. So LIC Housing is first. PNB Housing, if you look at it, the stock has started outperforming of late. It made a new 52-week high today, has made a slow and steady recovery from March end. So housing finance companies could be the first in radar. Then we look at NBFCs. We've seen all small finance banks continue to do well. For example, a Ujjivan or a Equitas, and even the smaller names in the NBFC pack, something like a Satin has broken out, Spandana Spurti. So we started seeing the markets have already started playing this whole sector one by one. We are seeing a lot of smaller names hit new 52-week highs, whether it is the Shriram Finance or L&T Finance Holding. So the sector is in a strong trend. One should be looking out for names which have consolidated well. So out of these names, as of now, the best risk reward is in LIC Housing Finance with a medium-term outlook. And would be looking out for other names also going forward. But the trend is very clear across the space.
The entire metal sector as well is looking good today. A buzz, Hindalco, Tata Steel, JSW Steel, Nalco, etc. All of those stocks are quite active in trade right now. Shibani, any thoughts here?
Yeah, so metals has been one sector where we've been somewhat underweight across our portfolios. This sector, as it is prone to very high cyclicality. There has also been significant amount of excess capacity that has been built up in the sector. And from a demand perspective, we are seeing that demand revival is taking time, especially where China is concerned. And globally also demand remains fairly muted. Now, there is again a lot of debate as to whether China will step up the ante and there will be a push in terms of getting growth back on track. So far, that has been elusive. The other big factor for metals has been that a lot of the metals demand comes from real estate in China, where again there is significant amount of oversupply. And therefore, we believe that at this point in time, given that demand remains fairly muted, the cyclicality is something that will play out in the sector. What we have been looking at when we are, investing in stocks across the space are companies where there has been some amount of balance sheet deleveraging, where there has been improvement in terms of capital allocation, as well as the fact that some companies which benefit from the fact that domestic demand overall has remained fairly strong. But by and large, we have been underweight on the sector, and that continues.
Okay, fair enough. That's the view coming in. Meantime, Ajay, a sector that you used to track closely, the entire oil and gas, OMC space, and it's interesting as well in terms of, the kind of earnings that the sector delivered. All in all, it was pretty healthy for the entire OMC space, upstream companies as well. And Shibani, actually, I wanted to get in your take. Given the kind of volatility as well that we're seeing in crude oil prices, etc., what's the outlook on how this sector could perform? What have you made of the kind of earnings, even from some of the heavyweights within the oil and gas space?
So again, this is a sector which is, as you were rightly mentioning, prone to significant amount of cyclicality. We've seen how oil prices have been volatile, and that volatility continues. But at the crux of it all, again, it goes back to the demand situation. Globally, with growth slowing down and growth remaining fairly muted, demand is likely to trend lower, and therefore demand remains muted. Why oil prices have been volatile has been primarily because of the supply side pressures that come in, and therefore it's more supply led rather than demand led. So again, from that perspective, this is a sector where we have been by and large underweight. Within the space, depending upon some pockets of opportunity, we have exposure, especially where the gas utility plays are concerned, where structurally you do see demand holding up. But the threat in terms of the EV space also comes in where the sector goes. So by and large, we have been underweight across the entire oil space. But at points in time, given valuations and valuation support, you may start to look at some of the segments. But our belief is that given global growth remaining muted, oil prices are likely to remain fairly benign, while we may see near term some degree of volatility because of supply side pressure.
Shivani, I also want, since we spoke about energy, there's also a massive energy transition which is happening, and there is a play across the world. Somebody was telling me the other day that there are, the demand in Europe and in US for transformers and transmission towers have risen very sharply, and there are not, adequate supplies. And if we were to talk to companies like Skipper, even some of the other KEIs of the world, KEC International, who are into transmission towers, some transformer companies, they also mirror the sentiment that increased inquiries from overseas. Plus, of course, there's a domestic factor there. In the power transmission full value chain, where are you most comfortable on valuation? Is it the power lenders? Is it renewable, legacy, metal and mining which feed into power? where exactly would you be more comfortable in?
Question and a sector which is fairly interesting. So, as you rightly pointed out, there was a lot of debate that again was happening within the sector, especially where climate change, ESG risks, and these risks are fairly real. However, what has happened is again possibly an outcome of the pandemic and the way the global geopolitical situation has played out. It is very clear that while the energy transition that we are seeing is likely to continue, especially for a country like India, we will possibly see a period of time where thermal capacity additions will go hand in hand, where green energy capacity additions are also concerned. So it's something that will coexist for a particular period of time. Most of the power companies that we have seen in India are in capex mode. There is likely to see incremental capacities coming in both on the green side as well as on the thermal side, and therefore there is that entire momentum that is playing out. So, from our view, at this point in time, if we look at the entire power space, we prefer the Gencos over the distribution companies. Some of the power lenders where growth was an issue are now seeing loan growth coming back, and there you have also support from valuation perspective as well as from a dividend yield perspective. So some of the names there look interesting. But the overall power space in terms of incremental capacity addition is likely to see strong momentum. And therefore, this is a sector, where, across our portfolios, we have been fairly positive.
All right, that's the view on the entire space as a whole. Meantime, a quick check-in then as to what the markets are up to. 19,651 is where the index is at, and the broader markets showing you smart resilience. A lot of the rate sensitives are performing. Names like Eicher Motors, Tech Mahindra, Hindalco, as well as Tata Motors, Infi, they're all a buzz, not to mention Reliance Industries at about 2353. A quick chart check. Naresh, on Eicher Motors, top Nifty gainer.
So Eicher has given a breakout move today. It was making new swing highs for the last 3 sessions, but today is a strong move on a daily basis in terms of the size of the move. And we are back to the previous 52-week highs and all-time high zone of 3,800 to 3,900. So if it crosses that, that would be a fresh all-time high. Overall, the whole auto pack has been doing well. Eicher was consolidating for quite some time and now looks promising. Just that after today's move, the risk reward is not great. So would wait for a fade off tomorrow to actually look out for a buy on dips. So still a hold at current levels looks promising.
And the other big beneficiary of rates peaking out is the high growth IT space. Shivani, the mid-tier IT companies, which indeed are high growth, because large caps are perceived high growth, but they have very anemic growth actually. Last 4 quarters are to be taken. But let's talk about Emphasis, KPIT, Persistent. That variety, I would say. They've shown high growth. Many of them have raised their growth guidance. So do you think this pocket is also likely to see valuation boost coming up if rates peak out? Because the discounting and the entire manner of valuation will get, will actually change if the rates indeed come down meaningfully in the next 12 to 14 months.
Yeah, so the entire IT sector per se has been struggling primarily because of the fact that again globally there has been so much of uncertainty. You are right that within the sector, the mid caps and the smaller size players have actually exhibited far higher growth, even in this kind of earnings or this kind of uncertain environment from a demand perspective. So if there is a situation where there is some clarity that emerges both in terms of growth as well as in terms of interest rate cycle, the sector will benefit. However, near term, the sector is still likely to see fairly muted trends where revenue is concerned. Going into Q3 is typically a seasonally weak quarter. This is also a quarter where there are significant amount of furloughs. And when we're speaking to a number of companies, the company seems to suggest that their clients are still not seeing visibility in terms of growth for them to up the spending, especially where discretionary IT is concerned. So therefore, we will possibly still have to go through muted a couple of quarters, maybe Q3 and Q4. And then, as you said, if the macro starts to stabilize both on terms of growth as well as interest rates, then we might see IT spending come back to a more normalized run rate in terms of revenue. Now, in terms of the mid caps, clearly the valuation differential between mid caps and large caps, like we were discussing in case of banks, is visible in case of IT as well as a sector, where mid cap valuations are far in excess of what large caps are trading at. And this is a reflection of the growth differential. Mid caps have become far more nimble and agile. They have built capabilities and skill sets in many of the new segments where growth is fairly strong and resilient. And they are, in fact, even competing with some of the larger players in large clients as well. However, valuation-wise, mid-caps are trading at multiples which are significantly higher than even their own average multiples, and therefore one has to be slightly selective where some of the mid-cap IT names go.
Time to get in some closing trade ideas from our chartists. Naresh, what are you tracking?
So continue like Federal Bank, which has taken a little bit of a dip today. At 150, the risk reward looks promising. A fresh 52-week high and all-time high done in the last couple of sessions. So from here, would expect a move towards 165 to 170 in the short term.
Kunal, let's get in your closing trade.
That'll be Reliance Industries. I think today's breakout is a strong indication that the major downtrend for the stock is now behind us, that the stock is also trading above the 50-day moving average. That's a stock which I'll look to trade in the closing segment.
All right, Reliance Industries, Federal Bank, those were the closing trades. Shibani, good to have you on board. Thanks so much for taking time out and joining in. All right, we'll take a very quick break right here on the show. Stay with us, lots more lined up when we return.
"14 overs, the run rate is at 114 for one, where Shubham Gill has crossed his 51 as we speak right now. And at this, and in 14 overs, 114 is not a bad score. But talking of score, Amnish Agarwal is joining us from PL, and we'll talk about the scorecard. The second quarter earnings have thrown up. Amnish, the narrative approaching the results was that this would be, people became watchful that this result season we would start seeing some early, kind of cracks in some of the numbers, either flat to weakish. But by the time we are winding up our second quarter earnings season, the narratives seem to have changed. It turned out pretty okay. What were some of the hits and misses in your view?
You see, if you look at, say, the aggregate numbers which we have studied so far, I think there are two big factors why you can say, first of all, as far as your aggregate volumes are concerned. And when I'm saying this, we are referring to, say, the volume growth in any sector or the segment. So there has not been any big surprise element on that part. The demand conditions, they have not predominantly changed than what we were talking, say, a month or two back. But what has been surprising is that the benefit of benign raw material prices has been better than what it was anticipated, say, a couple of months back. So that is one. And the second thing is that the companies which are having a good amount of cash with them, their treasury incomes have gone up because of the higher interest rates. So I think whatever has been, say, the aggregate beat, so these has been, I think, these are one of the two major reasons why there has been, you can say, not a disappointing quarter as far as the numbers are concerned.
If you can talk about some of the names as well, from the mid cap, small cap, large cap, you choose to, wherever you want to talk about some of the big upgrades in earnings, where cycle may get stretched on the higher side going forward.
Look at, I think the best numbers, if you ask me, they have come from the capital goods and engineering companies. So whether it was, say, an L&T, or you can say the numbers of ABB or some of the other, you can say, even small cap to mid cap, kind of, you can say, engineering and capital goods companies, I think there has been broad-based top-line growth, and operating leverage has given them good margin expansion. So this is one sector I would say that it has done really well across the board, but barring, I think, most of the bearing companies or, say, some solitary segments here or there where the numbers have not been that good, but broadly it is one of the best performing sectors. Now, the second sector where I think the numbers have been pretty good has been the automobile sector. Because the volumes, any which ways, they were expected to be good, and I think the benefits of low raw material prices and operating leverage has come. So the numbers of most of the auto companies, they have been quite good, if you ask me. And the third, I think the largest segment, for example, banks, the major outperformance has come in numbers on the account of lower provision of NPAs because the NPA provisioning has been lower. Otherwise, I would say at the EBITDA level, okay, there is not much of a change than what was being expected. Big difference has been the lower provisioning because you can say the asset quality remains quite good as far as banks are
Amnish,
concerned.
quick follow-up from the capital goods engineering. Some of the mid-cap, small-cap names which are top in your overall house call or house report, if you could share some names where earnings are good.
Okay, you see, among the larger ones, for example, your Siemens ABB are the two stocks. I think Siemens, there was also a news flow today regarding, first of all, the acquisition of 18% stake by Siemens AG from Siemens Energy, and then maybe possible demerger. So I think both these companies are technologically very sound. They are among the global leaders, and they continue to look good. So among the, if you look at, say, the smaller names which are there, for example, we had initiated on Hindustan Aeronautics. It continues to look good. Bharat Electronics continues to look good. Then I think Apar Industries is one stock which we have been very positive about. Apar has done well over the, say, past at least two to three quarters, if not more. Then I think some of the, you can say, other mid-cap, small-cap name here, even GE&T has done well. Some of the names which we might not be covering, for example, your Schneider Electric, if you look at, say, your Elanta's back. So if you look at I think that is why I said that the growth rate is very broad-based and the entire gamut of companies in capital goods and engineering have done well.
Okay, meantime, let's also get in a take then, Amnish. Afternoon, firstly, as to what the outlook is when it comes to the entire new age tech space. Do you believe that now that a lot of these companies have, upped their game in a way, pulled up their socks, put the focus on profitability, what investors and the stock markets really wanted to hear, that now this is a space that can be revisited? Would you be bullish on any names?
You see, we don't have formal coverage on many new age companies, but what I can say is that many companies have seen their business models becoming mature in the last couple of years. Many of them have even revisited the business model and made changes. And wherever in the tech space you find that the companies today are having much more nimble competition, and where there is some sort of a barrier to entry which has been created, those segments are likely to do well. For example, today you look at, say, a company like Zomato, where the industry was already consolidated. Now, predominantly Zomato and Swiggy are the two large players, and the market and the scope of growth is huge. Then such like models, I think you will see them developing, and one of their subsidiary, Blinkit, is also, I believe, catching up because the entire quick commerce space is also now doing well, is fairly consolidated. So I think even in the tech space, creating some sort of a business moat, and then you can say having some sort of a pricing power or threat to entry, that seems to be more important. And that is clearly playing out in case of, say, Zomato. When it comes to, say, a player like Nykaa, yes, they are doing well. Their numbers have also improved, but definitely the barriers to entry for a model like Nykaa, they don't seem to be that high to me at this point of time as they are for a, you can say, company like Zomato. Now, similarly, when it comes to whether you are looking at, say, Paytms of the world or Policy Bazaar, etc., I think some of the models are definitely maturing. But then one has to look at the longevity of the model, because particularly when it comes to the financial services, we have seen that many big houses, many big companies will come in, and the possibility of disruption in financial services seems to be significantly higher than many of the other segments of the, you can say, technology or new age companies. So the space looks quite interesting in the longer term, because as the consumers switch more and more to online, as we start using more of these payment gateways online, whether it is delivery, whether it is financial services or education, the fields are going to grow. And I think the kind of ecosystem we have developed in India, I think these stocks should do well over the period of long term. But I think, yes, many of them have matured, and for rest, I think it is more like a wait and watch.
Nuresh, I'll come to you for an observation which you have made, and that is about the Nifty 50 equal weight index. It is, barely knocking at the all-time high levels. Did not even break the swing low when Nifty, the ordinary Nifty actually went to 18,800. And small caps are also majorly outperforming. From here on, which side of the market appear more ripe, if I may ask that, going forward for this momentum to continue?
So actually, the fact is, apart from the heavyweights, the top 3 to 5 heavyweights in the Nifty, everything else is performing decently. So if you look at various other price points, we did not see a Nifty auto index go down similar to what happened with the Nifty or what happened with the bank Nifty. We did not see the Nifty CPSE go down. So a lot of large cap names also have done well. The small cap indices have made a new all-time high. Mid cap also came close to it today, most of the mid cap indices. Nifty 500, which is a little more, say, broad, is also 1.5% away from an all-time high. The Nifty 50 equal weight itself is 0.5% away from an all-time high. That clearly tells you it's not that the stocks are not doing well, it's just the heavyweights which are underperforming. So the only space where we actually look out for a change is maybe some heavyweights start taking leadership, and that is where the risk reward is. But as of now, we are not seeing much indications. Today is the first day where we've seen some recovery in the Reliance Industries as such. We've not seen a strong recovery in HDFC Bank. So Reliance could be a surprise. But overall, the way to go forward is to continue to be with relative outperformers. Say the things have worked out. So if we look at financials, all broking exchanges, etc., did well over the last 2 weeks, but they've continued to do well even today. So currently, the relative strength is a lot there in NBFCs. Autos look very interesting. So something like a Hero MotoCorp, Tata Motors, all of these names look interesting because the whole sector has been a relative outperformer.
In fact, Tata Motors, ahead of the Tata Technology IPO, is also knocking at 700, or at least eyeing that 700 mark. Amnish, let's go back to our discussion. Look at that. Beautiful 300, almost 3% up in today's session. Amnish, I want to understand from you, you must have gone through dozens of analyst calls as well after the numbers. I want to understand a flavor of the commentary coming in from corporate India. Some of the calls which stood out in your mind on the road ahead. Companies which have been negotiating the environment and doing very well, guiding at better margins, higher growth. Something which comes up in your mind this con call.
It's very difficult to, you can say, take a cue from the calls in general, because each and every company is operating in different, say, environment and different set of, you can say, circumstances. But definitely, as I said, I can give you a very broad sense that, for example, if you look at, say, all the companies in the financial services or the banks. So the banks, I would say, they seems to be pretty in a decent shape. With, you can say, some compression in NIMs might have happened for them, but the growth outlook for them looks to be quite good. Your NPAs are under control, but yes, there has been, you can say, some sort of a doubt which is coming that whether there could be some problems in the, you can say, the personal loans, which can come maybe not now, maybe, but in future. Similarly, if you look at, say, the entire, you can say, the broad FMCG stock retail space, then definitely the commentary which I can look is that there is still a lot of confusion as far as the rural demand is concerned. Some companies are indicating, you can say, some green shoots which are visible in the rural India, but the others are feeling more like a stay put kind of a situation. And clearly, on the entire broader consumption space, if you look, the clear disparity which I have been talking about is very clearly visible. Even I think the recent media articles on what happened during this last 3-4 weeks of the Diwali buying clearly shows that the demand for the premium goods, luxury goods, and the upper section of the society is intact. Whereas the, you can say, the absolute mass or the economy products, they are not doing that well. So I think these are, you can say, some of the trends which we could clearly spot. And again, you can say, for example, you look at the capital goods sector. Okay, the commentary there, I think, barring, say, maybe bearing companies or abrasives, I think commentary across the board has been very strong on the basis of, you can say, whether it has been in energy management, whether it has been, say, smart cities, smart infra, your energy transition. So their commentary has been quite good. If you look at, say, the entire building material stroke durable space, I think durable companies, except if you think, you can say, power cable, whether it is residential or you can say the industrial, So the cable segment has done really well. You look across companies ranging from a Polycab to an RR Cable. So that their commentary has been very good, but when it comes to consumer durables, I don't think many companies have given any strong commentary over there. Similar is the case with, say, your certain segment on the building material side. So I think it has been very, I would say, segment specific, individual specific. And for example, hospital companies, many of the hospital companies have also done really well, and many of them have indicated strong, you can say, your occupancy level, strong margin outlook for the, you can say, coming few months. Even some pharma companies are showing that finally the pressure on generics might you can say, it's a thing of the past and the things should start improving. So I think it is, I would say, I won't single out any name, but definitely there are clearly certain sectors which are now showing that their momentum could actually be setting in some of them.
On the Nifty Bank Index, you had a buy call this morning. As we speak, it's around that 44,200 mark. What's the outlook on the Nifty Bank, and where is it that you're seeing leadership?
So on the banking index specifically, I think it's a breakout today which you've seen for the banking index. We've come back closer to that 50-day moving average. What I actually like about the setup is in terms of indicators, where many of the indicators are coming back from a deep oversold territory, or rather a deep bearish or a negative territory. So I think that's a very strong sign that this may not just be a an ending point of the rally. This could probably be a starting point of a fresh trend for the banking index. Now, interestingly, within the mix of the banking stocks, I actually expected or anticipated IndusInd Bank to lead the charge from the front today, along with Axis Bank. But then you have other winners like Kotak Bank is doing pretty well for itself. ICICI Bank is trying to make a comeback of sorts. PSU banking stocks had a very good start at the first, I think, half an hour, first 1 hour. But then many of these stocks have seen profit booking for themselves. So I think it's the large cap, traditional private sector banks which are actually looking quite charged up as well as strong. So I believe that it's a good mix because you're not dependent on the PSU banking lot and the tier 2 performers, but it's actually the larger cap names which are doing pretty well. So I think that also could probably add to the momentum for the banking index going forward.
Okay, there you have it. That's the word coming in on the Nifty Bank Index, holding out steady, much like the rest of the market. By the way, we're up 1.2%, moving on, strength to strength, and making our way to the 19,700 mark as well. Let's find out those BTST calls as well. And Kunal, what is it that you're looking at on the charts?
So I'll go with Tata Steel as a first bet. Looks attractive. The stock is trading at 123 plus levels. Would look out for a buy, targets of 133, stop loss at 120. And from the mid-cap name, it's Snowman Logistics. That's a stock which has popped up on the chart in terms of a breakout, trading above 53, 54 levels. So would suggest a buy with 65 as a target, expecting another 20% up move for the stock over the very near term, stop loss at 50.
All right, Naresh, let's find out what is it that you're tracking.
So first is a buy on Federal Bank, a good risk reward here, stop loss at 147, target price of 155. Second is a buy on Container Corporation, the only PSE name which has been an underperformer, finally giving the first indications of a breakout with a new swing high, as well as getting close to a multi-month high, stop loss at 749, target price of 770.
Okay, there you have it. Those are some of the top BTST recommendations being flagged off by our chartists. Meantime, real estate is in a bit of a sweet spot, and you have that entire sector that's holding out quite well, followed by IT, the auto sector in the green. Amnish, given the fact that within the auto space, it was a pretty strong performance in the month of October, a lot of smart year-on-year growth. For instance, Maruti as well put out a 20% growth or so. The domestic wholesale numbers were fairly encouraging. What is it that you would like within the auto space?
You see, we have been positive. For example, Maruti is one of our top bets in the auto space because, as you said, the volumes have been good. The company is making a comeback into the SUV space where they were under-indexed, and the way their entire margin profile is, and I think the facility of the parent company which is now with them, so that will also add to, will provide the momentum. So I think Maruti remains to be quite a good play as far as your, you can say, the PVs. If you want to play PVs, I think Maruti is one of the best plays over there. Now, in addition to it, you see, if you look at, say, the two-wheeler space, Hero Motor has done really well in the past, particularly, say, couple of months, because the stock was very under-indexed and the valuations are very favorable for Hero Motor Corp. But having said that, it all depends on how the rural demand goes, because the Hero has a maximum, I would say, contribution among all the listed companies for the, you can say, 125cc sort of a segment, which is, you can say, or the entry-level segment. So if the rural demand continues to look up and if the rural demand does well, then the Hero as a stock has, you can say, more legs to it because the P multiples of Hero are relatively still on a lower level when compared to Bajaj, TVS and some of the other players. And on the PV or on the CV side, you see Ashok Leyland and Tata Motors. I think both the companies, they have been doing well as far as your numbers are concerned. But definitely, currently we are, I would say, already into the third year of the cycle, and it remains to be seen how far this your CV cycle can go. But Tata Motors to me seems to be a more holistic play, given the fact that they are now having JLR is now also improving. They are doing well on the EV side. And now this Tata Technology IPO is also coming. I think there could be some more momentum which could be there in the Tata Motors as well.
Okay, fair enough. That's a view coming in on some of those top auto stocks. Meantime, Naresh, let's get in your take as well. What is it that you like within the real estate pocket? Because put your finger on any of those names, Oberoi Realty 5.5%, Phoenix Mills, Brigade, Suntec, all a buzz.
Out here, a lot of names have already moved up quite a bit. Names which have not moved are in the small cap space, which is where there could be some upside. So something like Ajmera Realty, which is coming close to the highs back in 2021 and is above the highs of 2018, has been consolidating. So that is one name which comes up. Urvankara, which is trying to make a new, say, 3 to 5 year high. The stock had topped out at 170, 180 back in 2018. Then again in 2021. So the small cap names now look promising in the real estate basket. In terms of risk reward, apart from that, the leadership continues to be with DLF, which has done really well. But if one wants to get into real estate now, one could be looking at a basket of small cap real estate.
Okay, fair enough. That's a view coming in on the entire real estate space. And what about you then, Kunal? Let's get in a check on what the outlook is on the sector that's not really performing in trade today. And to a certain extent, pharma is looking a little bit sluggish in comparison. Your outlook?
Yeah, I think the pharma sector overall has done exceptionally well, but I think from now on, we've seen a different mix playing out for the pharma index. So for example, earlier it was Aurobindo Pharma, Glenmark, Zydus Life, which had done the heavy lifting in the first half of 2023. But right now you have the larger cap names like Lupin, Cipla, Sun Pharma, which are looking quite strong. So I would probably concentrate there in the large cap front.
In fact, let's